I'm really excited to welcome David Hall here so that we can have a deep conversation about how do we change funding and how do we make sure that what we see in entrepreneurship is really what's representative of our society. And as a result, the problems and the issues that we're seeing in our society are being addressed by the business leaders in the US. So excited to kind of kick that off. Here we are, David. Nice to see you. Welcome, welcome.
Thank you, Jenny. Nice to be here with you, and I'm excited to hopefully bring it home today. It's been an incredible week, and I'm really excited to hear and see and listen and profile all the conversations that have been happening. It's awesome to see, as somebody who's been in the industry for a while, to continue to see the evolution and elevation of these conversations.
That's right. So welcome, everybody. We are super happy to have you in this session entitled Reimagining Capitalism for Entrepreneurs and Their Communities. As I said earlier, I'm an entrepreneur in residence and lecturer at MIT, having just come off the acquisition of the company that I helped to co-found and run as COO, Optimus Ride. It's my pleasure to be here as sort of an entrepreneur talking to an investor and how we sort of build the future together, right? You need the entrepreneurs, you need the investors, and seeing the world that we want to build. So with that, welcome to our distinguished panelists. It's such an honor to have you here, David. So just a little bit about David, and then we'll sort of kick it off into questions, and know that we will make time for you. So do think as you're listening to our conversation, what do you want to ask? It's an open place here. Let's ask the hard questions because we are the leaders that are going to make things happen. So David Hall is a managing partner at Revolution's Rise of the Rest Seed Fund and is responsible for investment sourcing, execution, and oversight of the fund's portfolio companies. So I'm sure that's a full plate. David began his career with Revolution in 2006, serving as an investment professional across the firm, including as an investor with Revolution Growth and Revolution Ventures. David has worked closely with and served as a board director and observer for a number of Revolution and Rise of the Rest's portfolio companies, including Freight Waves, Foxtrot, Supercharge, Understory, and many, many more. Prior to Revolution, David was an executive with the Washington Post Company, and earlier in his career, David worked at Akamai Technologies, which is founded here in the Boston area, and was a financial analyst at Morgan Stanley and Company. David received a BA in economics from Morehouse College, represent for all of those that are here in the house, and master's in business administration from Harvard Business School. Also, shout out to Harvard, which is our partner down the street from MIT. So welcome, David.
Thank you. Wow, it's a little humbling to hear that your opening comments, but it's been a journey. But I'm so excited and really defined by the bumps and the curves that the last 15 years here and the last 20 plus years of the career brought.
Yeah, well, and it's funny the journey pieces, because even guys, as we were in the backstage, we learned that we have a shared history. When David first started at Revolution, one of his first deals was actually investing in the company where I got my exposure into the startup world, FlexCar. So I think with that, let's just kick it off with your personal background and how did you get to investment? How did you decide that was something you wanted to do?
Yeah, it's funny. So I'm the son of the South. I'm originally from Louisiana. I'd seen myself, and my goal in life was to be a state senator from Louisiana, wearing seersucker suit and bucks on the floor, voting for all sorts of great legislation. But as life sends you along the journey, it changes their plan and changes the course of your personal river. It was at Morehouse that I learned about this thing called finance. And how a job working with sort of companies and numbers and helping them build and grow was so intriguing to me, because we're all consumers and we buy Coca-Cola or Ralph Lauren. But
I'm right there with you, buddy.
It's 3:00 on a Friday. You gotta juice it up a little bit. But understanding how those businesses, on the face of it as a consumer, how they operate behind the scenes, like how do they grow their revenues? How do they make the decisions that they need to continue to grow and serve the customers, serve consumers? And like for me, when I was an analyst at Morgan Stanley. I was, graduated from college, went on to Wall Street, and it just was fascinating to know these brands, Gap, Macy's, Nike, but then read their annual reports. We read what they're all about. We read how they're thinking about things like child labor overseas, or divesting against energy, or divesting against certain sort of political regimes. And it's like, these are really big, important operations, and just understanding how that worked. And then, then leaning more into the technology side. When I left investment banking and went to Akamai, this to me was the future. These were the seeds that were building the types of businesses that were going to lead the future. It was all sort of web, 2.0. So this is when you could only buy books on Amazon. I'm a little older than most of the people on the call, but those are the early days of learning how technology was going to take over our lives. And I think learning how that has adding that to my personal portfolio has been phenomenal. And then coming to Revolution here, this was really about how do you take money, capital, invest it, and then grow. I mean, how do you take the capital that you invest and then work with the entrepreneurs to place that capital and have them make investments in people, in technology, in processes, in marketing, and have that sort of double, triple, quadruple the entire enterprise. It has been the most fun, most fascinating journey that for me at least. And it really has been, to me, about learning, constantly testing, what's true about the world, what's true about business, and trying to crack that code and try to find that advantage. And it's one of the best things I love about being an investor. How do you learn something that your competition can't learn, or doesn't learn, or has a blinder for, and then leverage that to make more money?
Yeah, of course. And kind of taking that to the investment side and saying, as an investor, how are you differentiating yourself in the market as well as you sort of see the changing tides of investment? And so kind of on that note, can you tell us a little bit, as you've sort of grown through the ranks in Revolution, and you've sort of seen its diversified approach to investing, a little bit behind the rise of the Rest mission and fund?
Yeah, sure. It's so one of the cornerstone principles that we believe here is that entrepreneurship changes communities, entrepreneurship changes lives, entrepreneurship can change various parts of the world. But for too long in this country, entrepreneurship, especially over the last 20 or so years, has been really ensconced in a handful of places like Silicon Valley, places like New York City, where entrepreneurs, particularly tech entrepreneurs, get a leg up. And it leaves behind, really smart, really talented people from Baltimore, as Quinn was talking about and shouting out, from Miami, from Phoenix, from Atlanta, from Chicago, from Portland. And all of these entrepreneurs didn't have a fair shake. But they went to schools like Morehouse or Miami-Dade or Arizona State or Michigan, all great schools, great education. But they would have to get on a plane and fly out to New York or fly out to Silicon Valley to be able to get their business funded. And we've always thought there was something that was a disconnect about that. And that's how investors see opportunity. If we can see a disconnect, we invest against that disconnect. And so we started Rise of the Rest to principally invest against that disconnect, invest in places where there were smart people chasing great opportunity, but they were underfunded. And Rise of the Rest entered at the seed stage, so the earliest stage of sort of business formation as a business is starting to get going. And we found immeasurable opportunity, just going in and saying, we're here in Philadelphia. We would do these productions where we call them bus tours. We would do 5 cities in 5 days. It was a little bit somewhere between sort of what Barack Obama would do or what Bruno Mars would do. So you go do the 5-city bus tour, and you start in Detroit. You go from Detroit to Pittsburgh to Nashville to Cincinnati is where we did that year. And you celebrate entrepreneurs in that city. But what we really were doing was learning and mapping that city to find opportunity. And then we were able to go back and make investments in each of those communities. And it has really, it's been something that's grown and evolved. Today we sit as 2 funds, about 300 million of assets under management, invested out of 2 different funds. We've got about 180 companies in 37 states, plus DC and Puerto Rico. And the thing one of the things I'm most proud about is 40% of our investments are in women-led companies or have founders of color. And so we really recognize that when you're in these communities, you also can see, we always joke that we invest in places and faces, and you can see the difference, and you can see the opportunity. If you're looking to invest in a Black woman, you do better looking for them in Atlanta than you would necessarily in Silicon Valley.
hmm hmm And so, kind of following up on that, how did you first decide which locations you were going to go to, and what networks or what established organizations did you try to leverage locally to say, hey, you need to be talking to this person or you need to be talking to this business?
Yeah, it's a really big part of our algorithm. We spend a lot of time studying the map. In one of my colleagues' offices next door, there's a big U.S. map, and we think about all sorts of things. What are the universities that are in the community? What are the big big corporations, big startups that have already started and been able to grow? What are the types of entrepreneurial support organizations that focus on on tech businesses, technology startups, but also where are those entrepreneurial startup organizations and support organizations that focus on women, that focus on people of color, that focus on connecting the dots. And we look for all of those, and then we sort of do a little rubric to see, like, and is the city ready to to evolve? Like, have they had some attempts? Have they gone through enough to say, wow, we really are ready to accelerate our startup ecosystem in our community. I'll tell you, one of the things, Jenny, that was really transformational in our business as we see cities was the HQ2 search, Amazon search for its second headquarters. Because what Amazon basically did is it sent out an RFP to every city saying, tell us how tech friendly you are. And there are a lot of cities that ranked and went through and did a deep, detailed analysis of their transportation, their education system, their entrepreneurial pipelines, and out of that, we saw so many organizations get funded and started that fostered some of that connectivity. And so we're trying to just draft off of things that others have done. We're not trying to sort of write the playbook for every entrepreneurial ecosystem, but we think that when those key ingredients come together, it becomes a really ripe environment that, frankly, then the graduates don't graduate from Morehouse or Georgia Tech and then go down to the airport and fly out to California. They stay home and they build awesome businesses in their own backyards.
And so, kind of piggybacking on that, are there some cities that you sort of put them on the back burner because you're waiting for that time that they can meet all of the heuristics within the algorithm that you sort of have your eye on, that people in the audience might be curious to know what those are?
Yeah, I mean, I think that there are areas that are still up and coming, and I think that there are a lot of areas. Some of the things that we do, we want to go into the city as its ecosystem is burgeoning. One story that I love telling is, the whole world for the last year has been talking about the tech evolution in places like Miami. And one of the things that we found was sort of an hour or so away in Tampa, they were quietly building some really strong, really important tech businesses. And we've done 3 deals in Tampa over the last year. And it's just, I think sometimes there is a little bit of activity over here, but the real activity is over here. And it's our job to continue to mine that and refine that. But we love finding cities that are burgeoning, that are making investments. I'll tell you, the other big thing that's happened recently is policymakers, mayors, governors, congress people, they are getting the joke. The real deal here is that small businesses are great. But if you're a restaurant, the restaurant shuts down. What usually happens is a new restaurant comes there. So if that restaurant had 30 employees, it shuts down. The next restaurant likely has 30 employees. So no net new job growth. Big companies, the Ford Motor and Procter and Gamble's of the world, we're seeing those businesses in sort of secular decline. They're hiring less people. The main source of net new job growth, and you can check me from the labor department, is through startups, because startups grow from you and I start a startup today. It's you and I in a garage. We hire 2 more people, and then we hire 5 people, then we hire 20 people, then we hire 80 people. And so net new job growth comes from backing these startups. And the other thing that mayors, and particularly mayors and local politicians, get is tech jobs tech jobs come with a 6 to 10x multiplier. So for every tech job, there's usually, 6 other jobs in the community. These are people who work at Starbucks and people who are dentists and people who, engage
The services around it, yeah.
the services that help support these big startup communities. And so really, like, we're at a time in our economy as we've converted into much more of a service, away from an agrarian and a manufacturing era and a services economy. We're now moving into the knowledge economy, and you're seeing the benefit and the premium that the market, and particularly the politicians, the policymakers, put on jobs that are tech enabled, jobs that help propel technology forward.
And is the goal, as for example, take Tampa, where you found these companies, and you're investing, is the goal to let them grow and scale there too? Because that happens sometimes too, where you go and you invest in the companies at that particular area, and then it's, oh, but if you really want the scale, you're going to have to go to these places. Do you think now, in sort of this post-pandemic world, where the future of work is a little bit more diffuse, that people can continue to stay where they are and grow that ecosystem?
We think that place still matters, and we think that and I'm sure we'll talk a little bit more about this. I think the pandemic has created a lot of dislocation, and we're dealing with the ramifications of that. But we think that we want to invest in founders that recognize that place matters. So either their headquarters or a main office is important, and we want them to do a couple things. We want them to build in that community. We want those companies to build and scale. We want those companies to create wealth, and we want that wealth to be motivated to stay and reinvest. We want to like our most successful investments will recycle their capital locally, because that's Not to say that we are not impact investors. We are a typical venture capitalists. We want to put $1 in the machine and get 100 back at least, if not more. But we also want to see that 100 stay locally and get reinvested in in the next generation of startups. We think that that's better for our returns and for our ecosystem as Rise of the Rest. But we frankly think it's better for America. We think if Tampa gets if our 3 companies all become unicorns, which are companies valued over $1 billion, and then they exit, and the founders and the management teams are all insta-millionaires, we want them to spend their money there, not go buy an island somewhere in the Caribbean. Keep investing in both, investing, donating. So we're philanthropy and sort of social enterprise is a big part of this as well. But we want to see that money circulate, because for us, as we make more money as an investor, as a fund, as we generate more profits and returns for our investors, like, it's the byproduct of that, or the intentional byproduct, is like stronger, more balanced, more equitable, more engaged communities. And that's if we're doing that, and we're still around in the next 10 years, I hope we're all doing much better.
Yeah, no, definitely. And kind of going back to the portfolio that you were saying that you were really proud to see sort of the diversity within that, how do you build the rapport and the trust with these entrepreneurs, so that they know that you're there with them in the long haul?
I think the first and most important answer is always like transparency and honesty. I talk to and have engaged with a lot of founders, a lot of Black founders, and a lot of it is really helping them see the whole field, right? Because if you read, and I think these are great books. Reading books like Venture Deals, which sort of walks you through how a venture deal comes together. They're great books, but I think it's like, I always joke, in the medical world, right? There are all of these diseases, and then it's like the last paragraph is, but if you're a person of color, this might affect you this way. And I think
Right.
the same application is relevant for venture capital. Like, yeah, it's great. Yeah, you go out, you raise your Series A, you put your deck together. But if you're a person of color, or if you're a woman founder, like, these are some of the things to prepare for. Like, these are some of the symptoms. These are some of the things to watch out for. And I think for me, arming those founders with that knowledge, because I've been doing this now for 15, 16 years. I've seen thousands of deals come across my desk, and I think being able to prepare them, be honest, and then help them work through the, no, don't say it like that, say it like this, and really coach them from the sidelines. Because I'm not an entrepreneur, I'm not building the company, but I've seen so many companies get built and so many companies scale. And so being able to provide that advice, be that trusted advisor in their ear saying, when they say this, what they really mean is this, and try to help them. But it starts with authenticity, transparency, and just genuine. Sometimes I just pick up the phone with one of my founders I speak to all the time. We usually speak like Friday or Saturday night at like 8 o'clock. I'm like, how you doing? What are you doing? Are you working? Are you taking some time off? And so I try to establish that rapport based on honesty, based on authenticity, so that when you have the great conversations, and I love more than anything having those great, congratulations, you closed your round, but it's also when you're having those harder conversations, like, yeah, I know it's been a rough week. You pitched 5 investors, you got 5 no's. Like, let's contextualize this. That's where the work of a venture capitalist, or at least as I see it, the work that I like to do, really happens.
Yeah. And so I think, what I'm hearing there is sort of that mentorship and the importance of mentorship, and just kind of going back to your career and your journey, how did you sort of leverage mentorship, and how do you sort of use that to advise folks on how they should be thinking about mentorship?
I'm a big fan in official and unofficial mentorship. I'm a big fan in finding mentors that look just like you. So I would find Black male mentors, but I'm also in favor of finding mentors that look nothing like you. So Asian women mentors, and I'm also, I'm a big believer in pulling mentorship from all sorts of places. And I'll say the biggest thing, one of my most important things about mentorship is ask specific questions to your mentors, because I think general questions, like what should I be doing, get general answers. I don't know, do something that encourages you. Specific questions, I'm trying to get a job as an intern at one of the 3 tech companies that are located in Grand Rapids. Do you know anybody there? Get specific answers. Oh, here are 2 people, but I know one other guy. Like I find that one of the mistakes people make in mentorship is they come throw themselves prostrate on the altar saying, mentor me. And I was like, people are busy. Good mentors are very busy. And so if you really focus your question and ask specific questions, they give you specific answers. And in the final piece, I've had really good peer mentors who are going through the same stuff that I'm going through, and ask them the same questions, because they're phenomenal. They've got phenomenal outlook because they're in the same muck with you, and they can give you some great advice. But I've had mentors like Phil Bronner was the first first Black venture capitalist that I knew, who was the first partner at a venture capital firm that I ever knew. He's been a mentor, co-investor, now friend. There have been peer mentors like Elliot Robinson at Bessemer Capital Partners that I've known for years. And so I just mine those relationships, talk to those folks. But then again, I'm unabashed. I also see mentors. My wife, who's a therapist, is also my mentor. And I just, she is a independent entrepreneur, businesswoman, medical professional, doing her thing. And I just I'm in awe by what she does. And so I really do look for mentorship everywhere, even at my stage of my career, and I take it from everywhere.
Yeah, and actually, I think it's great that you bring your partner into this, because I think, especially in the investment and the entrepreneurial world, it's an all-encompassing thing, and so you bring your whole family into it, and so how do you manage that partnership as people kind of think about. You have a lot of new entrepreneurs too who are thinking, how do I manage that aspect of my life also?
So it's funny. So one of the things I always say, Jenny, is, when particularly as we talk about like founders of color, Black founders, everybody always talks and jokes, well, just go raise your friends and family round. And I'm like, we are the friends and family. Like we're the ones who our family calls when they need, $500. And so it is not lost on me that, like being the friends and family is hard. But I think that's where being in places like being in your hometown, if you grew up in Detroit and you want to start a software company and you've got, a family and you're trying to like hustle and start that company in San Francisco, that makes no sense, because while your mom or your family might not be able to write you a check, they could babysit while you're, they can watch the kids while you're off, at a fundraising event. And so I think not denying the fact and not limiting the fact to being all about dollars and cents from what you can pull from your family is important. Our family is, we've got 2 young boys. They're super active in school. I am super fortunate to have a partner that works really, really hard and has a lot more flexibility in her career. But I think to me, it's about communication. It's about I'm notoriously bad at managing our family calendar, and I'm trying.
Me too.
Every time I get like a new trip, as soon as I get a trip, I mail it to my Gmail, so I load it in my family calendar so it's there. And it's a struggle, and it creates trade-offs. I mean, there are things, the idea that people can have it all, like I give up on that. I think recognizing that life and a happy, successful life is a series of trade-offs. I don't have like all of my friends have to be basically low maintenance friends. I can't have the friend that I need to call or hang out with every weekend. That just doesn't work with my life and my calendar. But like the friends that I have, we're great friends, and when we spend time together, it's amazing time together. When I'm a sideline dad, this weekend I will be on the sidelines of a basketball and two basketball and 1 soccer game and probably something else. And I love that. That's the thing I fantasize most about being a father, is sitting on the sidelines yelling for my kids. But to show up for them, that means that, on Sunday night, I'm pulling out the laptop and I'm doing some work and I'm getting some emails sent. And it's, I would make that trade, every day of the week, but it is a struggle. And look, I'm not the entrepreneur. The entrepreneur lives and breathes their business. And as you know, it's something that you take home with you, and it's like a member of your family. And so I always suggest to founders, like, find those places, find those spaces where you can go and like disconnect and unplug. One of my hacks is I shut down Friday night, because if it's a fire drill on Friday night, it'll be a fire drill on Saturday night too. And so I try to take at least 24 hours where I'm off, and I can like let my mental, my mental battery recharge, my mental CPU sort of, go through its update, install all the updates while I'm doing other stuff. And it really is it has been and become a helpful hack for me.
Yeah, no, and I think that takes us to sort of that other piece of wellness. I think a big topic that's been coming up is how intense entrepreneurship is, because you're right, it is all encompassing. You're on it all the time, and you are the front lines of that fire drill, for example. And so how do you as an investor sort of think about that as you're evaluating an entrepreneur, in terms of, yes, it's going to be intense, but do they have the capacity to handle that?
It's a fascinating question. I mean, one of the things, founder mental wellness is something that we've done a lot of work on to support our portfolio companies with. Because one of the things I found is, frankly, it's lonely at the top. There are challenges that happen, as you're the founder or CEO of the business. You know everything. You know the teams that you've got that are working. You know the co-founder that you've got that's not working anymore, that's going to have to be terminated. You know that you've got 4 customer calls out and maybe 1 might materialize. You've got, half dozen investor calls. Like, all of that sits between your ears, and you've got to manage all of that, and a family, and a personal life. And so one of the things that we started working on, and it's been so successful, is we've been connecting our founders in smaller groups. Because even though one company might be a healthcare company and one company might be a consumer company, those 2 founders are like, I know your pain. Let's just talk it out. And we did this at one of our events, and we had these founder groupings set up. And to a person, I was like, this isn't going to work. Nobody's going to open up about the problems or their issues. To a person, we got emails saying, this was exactly what I needed, because nobody else knows my struggle but another tech founder who's trying to build a company outside of San Francisco, who's going through this because they're a woman or a person of color, or we invest in everybody. So we invest in white men, white women, everybody. And just hearing the feedback from just like having a safe space to talk about, challenges, failures, successes, paths out of the muck. It was so powerful. And it reinforced for me this notion that, we've got to make space even for founders. I ask them all the time, like by show of hands, when was the last time any of our founders had gone to the doctor? Because it's one of those
Yeah.
where, there's so much self-sacrifice on founders who just don't spend time going to the doctor, don't spend time, taking care of themselves. And we've got to reinforce it. We've got to keep re-upping that question because, if something were to happen to that founder, we've had founders in our portfolio who just kind of burnt out and timed out or had health challenges because they had, they live a startup lifestyle. There's a lot of Diet Coke and a lot of pizza, not a lot of treadmill.
Nights, yeah.
And they need to take some time, and the business suffers for that. So we want to encourage, health, wellness, positive mental health, positive health, and healthy tips, because again, we recognize how grueling it is, and we want to really lean into that. Furthermore, again, I always want to bring it back, and I think for founders of color, the mental piece, and I know we're going to talk about this a little bit, particularly over the last couple of years, has been really acute, and it was really important for me, for us to make sure that our founders are doing okay. And so again, a lot of my check-ins start particularly 2020, 2021. I would get on a Zoom, I'd have a long agenda, but I would start with how you doing. And sometimes that was the only point we cover on the agenda because it was a lot to decompress.
Yeah, and actually kind of going to that point on the pandemic side, I mean, it is the fact that communities of color were hit the hardest. And so, to your founders and entrepreneurs that you work with, I can only imagine that some of them were also, through their families and their connections and their relationships were hit. So how did you sort of help them? Because you sort of need to stay focused on what's happening because there's this black swan event, but at the same time, it is the case that our communities are being hit hard. And so we were constantly managing that tension.
Yeah, I mean, so I think I'll talk quickly about two phases. So the early phase in 2020 for us, the onset of the pandemic, the aftermath of George Floyd, we usually do these fantastic in-person events, and we were always overcome by, people wanting to come and meet with us, hang out. We would drive our big red Rise of the Rest bus through town. They'd join us on the bus. Not responsible to do that in the midst of a pandemic. And then you superimpose on top of that everything that happened with George Floyd. And so I went to our team, and we had the support of our chairman, Steve Case, and I was like, I think it's important for us to do something to acknowledge the challenge that's going on in the world. And we took our normal Rise of the Rest tour, we spun it on its side and made it a virtual equity edition tour in conjunction with Morgan Stanley's Multicultural Innovation Lab and Atlanta's OHUB and 100 Black Angels and Allies, and created basically a pipeline for Black-led startup founders. We were able to identify nearly 500 startup founders. We sent them, brought and did a couple days worth of programming. We also were able to identify and partner with over 100 venture capital firms so that we could answer that question that people like investors always say, there's a pipeline problem. I don't know enough Black founders. Well, here you go, 500 Black founders with amazing startups, again, all led by Black folks. And it was, to me, like one of the things I'm most proud of in my career, because it really did. I felt like we met the moment in being able to answer some of the pipeline questions and exposing a lot of Black founders to mainstream venture capital investors. We were able to, we picked the winner. That company is Chicago-based, Reaply, run by a guy named Dr. Gary Cooper. But we also had two runners-up, and those were companies called Zertu out of Dallas, Texas, and Canaries out of Dallas, Texas. And all three companies are great. We also invested in 6 other companies led by Black founders because we found them and we thought they were so great we couldn't let them pass. And those companies have continued to go on and raise more and more capital. And so, like that to me, as the pandemic was just starting, was important. As it's continued, it really is a question of let's lean into ways of making these introductions to help help accelerate, particularly some of our Black founders' businesses, because, yeah, and as we talked about, the road is always steeper for those founders to continue to raise money, and it's been a great path, and for the most part they've done amazing work raising phenomenal rounds of capital, and I couldn't be prouder, of the work that they've been able to do, the opportunity that they've had to rethink lots of parts of their businesses that they wouldn't have had to if we were in sort of the normal world. But because we had the whole world shaken up, they were able to rethink, what's my supply chain looking like? Am I going after the right customer? Are there new opportunities for me brought about by work from home, remote work? And it really has been. I've got dozens of examples to tell you about that. But it's been a real fun thing to watch from the sidelines.
Yeah.
Understanding that it's also been a hugely trying time for our team, for lots of founders and lots of families.
Yeah, no, I completely agree that the question is always, how do you take a challenge and turn it into an opportunity? And how do you leverage these Black Swan events to become anti-fragile, essentially?
I'm writing that down. I love anti-fragile. It's a great term, because it really has been a great opportunity for businesses to, like even sources of funding like PPP loans were incredible equalizers for those that could get it, to be able to open up new pathways, open up new customer relationships. And so it was really, it really did bring out the classic definition of an entrepreneur, right? How do you find pathways with scarce resources? And there were so many scarce resources. Travel was shut down, supply chain was shut down, but great businesses, great leaders were able to find a way.
Mm-hmm, mm-hmm. And then kind of going back to what you were saying, which I think it's totally right, is those additional support mechanisms for URM and women entrepreneurs. What are some sort of tactical things that you have an audience here who are founders, and they are thinking, what do I need to be aware of? What are sort of the hidden messages that we need to be watchful for, especially as we're having these investor meetings?
Yeah, look, I think to me the biggest thing is trying to prevent what I call goal posting. And it's something that happens a lot to diverse founders. You'll go in and you'll pitch your business, and you're like, I've got $500,000 in revenue, and blah 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 blah. And the investor will say, come back when you've got, oh, you're at $500,000. We were really expecting somebody to have, $1 million in revenue. So you go away and you come back 6 months later. Hey, I'm at $1 million in revenue. And they're like, oh, what we were really looking for was 1.5 million in revenue. And I think at that point you call the question and say, look, what exactly are you looking for? Because as you can see, I've been building to all of the thresholds. Like where are we going to stop? So I think making sure that you understand and call out goal posting is important. I think you also recognize, particularly for women founders, a lot of the questions that you get are different than the promotion type questions that the women founders, sometimes male founders of color, get these preventative questions like, how are you going to prevent this from happening? How are you going to risk adjust this? As opposed to what we call promotion questions. How big can this business get? How fast can this grow? And so my suggestion is to always turn one of those preventative questions into a promotion question, right? So how are you going to prevent this from happening? Because the market is so big that there are so many potential buyers and sellers out there in my market, and I think learning how to start being coached on and learning how to start flipping those questions is part of that successful venture capital jujitsu that I think starts to erase doubt. I think one of the questions that that I've heard Black founders get indirectly are things like, did you really build this? Which on the face of it is so incredibly offensive. But the to me the best retort for that was, could you build it? Right? And it's really pushing and sort of trying to, with the same grace that we've got to navigate a lot of the world, push back and elevate the conversation so that we're playing it on our terms and not necessarily always having to play it on the opponent's terms.
Yeah. And, in terms of sort of the future of investment, and sort of elevating equity and so forth, do you see venture funds, including your own, being very deliberate about certain stats or certain metrics that are being worked towards? Or do you think that that's also sort of smoke and mirrors and a little bit of like, well, if you just check that box, then you can say that you're doing it, even if you're really not in it to do it?
Yeah, look, I think if it doesn't get measured, it doesn't get managed. And so I think being able
A
to,
true accountant, finance person. Yes, very
but
good.
yeah, I mean, look, I mean that's true with everything else, and I think the systems are in place now to be able to help manage it. I think there's a greater sort of tops down push. I think the world is getting ready to sort of really fully embrace the ESG rubric, the environmental, social, governance rubric that a lot of publicly traded companies are having to sort of attest publicly that they are, their products have limited environmental impact, that have, they produce great social benefit, and they've got sort of really good governance that they invest in. Excuse me. They invest in sort of good governance, and I think the trickle down of that is going to quickly start to happen for private investments like the ones we make. And I think that system of measurement and tracking is only going to start happening more and more. And so I think in our world as investors, so we most of the investors who invest in our funds are people like college endowments, like the Harvard Endowment invests in, or the pension funds, or state pension funds, state teacher pension funds, etc., invest in venture funds. They're also driving for more ESG. They're also demanding more equity and inclusion among sort of the managers, the people that they invest in to manage their money and invest their money. And then in turn, they're asking us to make sure that we're investing in more women, more diverse entrepreneurs. And so we're not there yet. We got a long way to go. But I think that the tides are changing where the expectation is, at the very least, not knowing your numbers is not going to float for much longer. I think people are going to need to know who they're investing in. They're going to need to know how they're investing. They're going to need to know the sustainability and sort of environmental impact of the businesses in which they're investing. And I think that that's all going to bode well for founders of color.
Yeah. And yeah, and do you have a sense of what are some of those key metrics already in the conversations that you're having, or is the conversation right now asking that question?
Yeah, I think the conversations right now, those systems are being set up, right? We're in the process where a lot of these rubrics and these sort of matrices of evaluation are being defined. And so it's really important, I think, for us to make sure people at the CalPERS and at the State Pension Fund in New York and some of the big market leaders are really leaning in to create those evaluation metrics that benefit us. And so it is things like, how many women on your board of directors? I love the fact that NASDAQ, organizations like NASDAQ, organizations like the state of California have started to mandate that there must be at least, a certain number of women on the board of directors. And look, I'm okay with that. I'm okay with the mandates for things like that because I think it starts to usher in change. Lord knows what good we're going to see now that there are 4 women on the Supreme Court and 2 women of color on the Supreme Court. I think that that's going to be a fantastic change that we'll only be able to see the benefit of, years from now. But I think that starting that conversation, continuing to provide that pressure, is the first step at seeing sort of that get fully indoctrinated.
That's
But,
great.
but as I started, Jenny, what gets measured gets managed, and like if it's not being measured, if you don't know how many, I mean, even little things like, do you know how many? I mean, there are so many big companies that have like no place for nursing mothers to nurse besides a bathroom, and
Yeah.
talk about like a big sign of inequity to women who want to work and build their careers at this company, right? Or companies like that, right? Like, and I I think being able to recognize and acknowledge and start counting. No, there are 5 nursing rooms in this building that support 1,000 employees. We're on our way. I think that's really the best sign to really be on our way.
That's great. That's great. So I know we're going to jump into Q&A for the audience. So I guess I'll just ask this final question, and then we'll sort of flip it over, which is, over the course of your career in investment, what have you seen change for the better or for the worse? And tell us a little bit about what you see or what you're hoping to see as it pertains to equity.
What's changed for the best is we can point to Black-led unicorns. We can talk about, we're not still counting, we still are counting, but like we're well into like late double digits, maybe even early triple digits of the number of Black women that have raised more than $1 million. It was awesome. Like, we were looking at that list, and we've invested in like 4 or 5 of the Black women that have raised more than $1 million in funding. And it just is like, I'm so glad that that's not the headline anymore. I'm glad that we're moving into an era where a Black-led company being backed by Rise of the Rest or some of the other top venture firms is not a new thing. And I think that is so encouraging to me. I think it's encouraging to me that we're seeing this great resort of talent. People that are saying, I don't want to live in a really expensive 1-bedroom apartment in San Francisco. I want to go back home, and I don't want to lose my tech job. So I want to go back home to Nashville. I want to go back home to Miami, and I can continue to stay engaged in a tech job and continue to build my company, and still have access to a number of both financing and entrepreneurial support resources. That's also really incredible for where we are. I think what's not going well is like still the math, right? It's still easier to get funded if you're a white guy. It's still easier to get funded if you went to one of a handful of schools. It's still easier to not get the mixed signals when you're pitching your business. And so I think that I'm an investor. I'm a venture capitalist. That likely means I'm an optimist, a forever optimist. And so as I think about the path, I feel like it's better. But I think the thing is we're still living in a world where we're adding to the transparency. We're removing the barriers, and we're still peeling back the onion. And I think that the more that we continually can do that, the more we can bring more people with us. And it's so great to see when people bring the politicians and bring the universities and bring in the HBCUs and bring everybody forward. We are able to start making those momentous steps forward. What do I see around the bend? I see technology continuing to accelerate the jobs of the future. I see the ability for markets, particularly, it's funny, I always love this, explaining the economics of Black hair to white investors is incredible, right? Like the idea that people spend hundreds of dollars, and they're like there's a whole market in Black beauty that just that most white folks don't even know about, and like that economy is deep and rich and growing and incredible, and it's being like no one's investing in that except for Black folks, and now being able to bring venture into some of those markets is really incredible to see. And so I think that as we start, as investors continue investing below their noses, you'll still see the folks in San Francisco keep trying to find rides to the airport and dates and ways to get food delivered. But you're going to see people in places like Atlanta build for the businesses that are under their noses, and the barbershops and the hair salons, and people in Iowa and Arkansas build for the next generation of farming, and people in Detroit build for the next generation of mobility. Like all of that's going to happen, and I think it's going to be pretty powerful.
That's really exciting. And I love what you're calling out in terms of how are we using our local community needs to think about these massive business opportunities. And I'm nodding vigorously on the hair because so my husband is African American and I have a mixed daughter, so I'm Latina. And so, even just that aspect, right, where you have mixed hair, and what does that mean, and how do you explain that also? So there's all of these opportunities for business that are so rich in our communities. And I'm just so excited to see that future potential. We've seen it in the music industry, right? And I think that there's so much other opportunity in other places. So let's kick off the Q&A. Quinn, thank you so much for your help here. Let's go to the first one. I'll just read it out loud. Is there more opportunity for funding in certain areas or industries? Tech is hot, but are there other industries getting funding more than others?
Yeah, so I'm gonna. There are a couple of little questions in there. I want to break them apart. So I see technology in every industry, right? So I think that technology, we were talking. We're talking about Black beauty and beauty in general. We're investors in a tech company called ShearShare out of Dallas, Texas. The way to think about ShearShare, it's hair B&B. How do hair salon owners rent out their chairs to other stylists who might be local and need a place to braid hair or cut hair that don't want to open up a whole shop? That's a tech solution in a very old, very sort of analog business. And I think you're going to see more and more of those businesses spring up because it's so much better to do your business, leverage your mobile device to manage your business than trying to do it in pen and paper. But we're also seeing on the other side of that, lots of new businesses around like financial services companies that are enabling people to bank easier and not necessarily rely on the Bank of America's and Wells Fargo's of the world, but find banks that meet their needs, like a lot of banks that cater to underbanked and immigrant communities, and trying to figure out ways to really address their needs specifically, as opposed to Bank of America, which tries to meet the middle of the road's needs as much as possible, as opposed to specifically meeting other people's needs. Again, something that's influenced by technology. So I think that, there are other industries getting funded, but I think the ones that get most of the venture funding are the ones that leverage tech enablement to deliver their service.
And do you think that that's just because of the scaling trajectory, essentially, and the reach that's possible, or is there something else?
Yeah, look, I think venture capitalists like businesses that can get big fast. I mean, it only benefits us to see sort of exponential scaling happen in the business. Revenues double year over year, because that's the only way that we're going to get paid back. I think that we're also seeing the growth, frankly, of other financing alternatives. There are people that are investing in like revenue-based financing, so that you pay like a royalty stream, a percentage of your revenues back to your investors, and they continue to make money as your revenues grow. And those we found to be really interesting and unique ways for often sort of underrepresented founders to raise capital.
Yeah. We have a second question here. Is it the job of a founder to, quote, convince an investor who doesn't look like them that they are investor worthy? Or should that founder find an investor who they believe can culturally connect or relate?
So I think it's both, right? I think entrepreneurs have got to be hustlers. And part of that is you've got to find ways to turn no's into yeses. And a lot of those no's are going to come from people that don't look like you. And I think that the goal should be to turn some of those no's into yeses. But I also think, I think one of the best things about investors is we like to talk about our investments. So a lot of the deals that we've done in the past are public. And so the availability of the data to mine through and sort through the data to find deals that find investors that have invested in founders of color is better than ever now. And this is part of that. If it's measured advantage, and so you can find. I mean, we've had investors we've had entrepreneurs that we've backed in our portfolio ask point blank, like how many investments have you done where there are people of color in the founding role, in the management team? And I think it's a good, fair question to ask, because I think that there are also some unique needs. If you're looking at a fund, you're a woman investor, you're a Latina entrepreneur, and you don't see any Latinas or women of color on the portfolio page of a fund, it's worthwhile to ask a question. But then I also think you're right. Whoever asked the question, I think it is really good to find supporters, or as my friend Rodney Sampson says, co-conspirators, people who are willing to dive in and help you find your path out, And those people, like while they might say no to invest, they probably have 2 or 3 other good sources of people that you should talk to.
So then just kind of to dig on that one a little bit, is it sort of where it's just more about the strategy of your investor outreach? That is to say, oftentimes the recommendation to entrepreneurs is, reach out to the ones that sort of are your tertiary investors, so that then you can practice your pitch and get all of the kinks out from your story, and then you narrow the funnel to like, here's your reach when you're like super polished. How does something like this sort of play into it too, where it's like, look, I know that I'm going to get a no on this one, so I'll put them in the second or the third verse, because you're trying to hit a home run.
Yeah. I tell entrepreneurs to tell their story to everybody. Right, you're in the back of an Uber driving from the airport, because I feel like the more times you tell it, the better you get at telling it, the simpler you can make it. If you can't tell the story in a way that your grandmother can explain what you do, you got to make it simpler, because you got to be able to engage investors that this is going to be big, this is going to be generate lots of revenue, this is going to be able to grow quickly, and if your solution is so nuanced or so unique, it's hard to tell that story. There's going to be a disconnect. And so I love the pyramid. I love, you want to try with the people that, you think you're going to poke the most holes in it. I asked so many of my founders at the end of their fundraising process, what did you learn about your business? And they all say, I learned more about my business from the people who told me no than the people who told me yes, because they punched the holes in it. They said that, we don't believe that you're going to be able to make sales grow like this. And it just was like, this is why. And so it taught them things about their own business going through the fundraise process.
That's great. That's great. Well, we have 2 minutes left here, and it's been a great conversation. And thank you so much for sort of all of your comments and thoughts. Any closing
yes,
ideas or things you'd like to bring up?
Yeah, I never end this without telling people, particularly Black people, particularly people of color, particularly Latinos, we belong in the rooms, and don't let your own perceived bias keep you out of the room. I belong in the room in my investment committee every time we make a decision. I belong there, and I have value add and lived experience that weighs in on my ability to make really strong investment decisions. If you're a founder, you have the domain expertise in the business that you're building to belong in the room. And if there are not enough chairs, as the famous proverb always says, you bring a folding chair and you sit in that chair and sit at the table. We belong in the rooms, and the things that we have to say are valid because they are based in real life experience. And don't let anybody take that away from you. It is tantamount to our ability to exist and drive and be part of this next evolution of technology, of the economy. And I just think that, as many times as you can hear, I say it to myself frequently, we belong in these rooms. We belong in these rooms. So if there's one big thing I'd love to leave, it's just the reapplication of that mantra. Like, don't let anybody tell you you don't belong in the room. You belong in the room.
And we are so glad to be in this room with you. Thank you for everything.